Technology hands off market leadership, and healthcare, biotech, real estate, and industrials have taken over as the leaders of the market. Magnificent Seven and especially the communication services are lagging behind quite badly, actually. We will also look at Bitcoin, and rebound is quite likely now, but overall the bear market is still intact for Bitcoin. We will also look at strong dollar as it weighs on precious metals, and silver is more than 20% down in just 2 weeks. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, June 26, 2026. Please don't forget to hit the like button, share this video, make a comment, even put thumbs up or a heart emoji in the comment section. This is what helps keeps the channel going, as well as promote these videos. Thank you again for all the comments and the likes I've been getting. If you are not yet a subscriber, consider signing up. We'll be covering all of these various securities, such as large cap stocks, ETFs, as well as speculative securities in the members only video, which is coming out later today. As always, I'm going to be using my proprietary MasterChartsTrading.com price action indicators, which are pictured on this chart. There's green, blue, red, and yellow lines. They're available for TradingView.com interface. TradingView.com interface is free. Sign up for free on TradingView.com. Come back to Master Charts Trading. Sign up here, and I will open the door for you on TradingView.com. All right, let's get started. So we are currently looking at S&P 500. We're not that far off from the record highs. We did pull back somewhat. It's not a drastic pullback yet. In fact, we could look at the 4-hour chart. 4-hour chart is a little bit more granular and gives us a little bit better idea of what to expect, at least in the very short term. So each candlestick right now we're looking at is 4 hours worth of activity, and these are S&P 500 futures. So notice an interesting action here right there where I'm hovering on 22nd of June. We saw a breakdown below this blue support resistance line. Remember, this is a 4-hour chart, so we have somewhere about, let me see, 5 candlesticks per, oh actually 6 candlesticks per day. Yeah, 6 candlesticks per day, 24 hours in a day. So one of the 4-hour candles right there on the 22nd of June broke below this blue support resistance line, and notice what happened afterwards. The price tried to recover right there on the 23rd, again on the 24th, yet again on the 25th. See how it tried to get up 1, 2, 3. They tried to get back up the blue support resistance line and then failed and made a new low. So this is a very typical kind of action, and you know, if you know how to read candlesticks, you will notice this type of patterns quite often. And so we can see that, you know, on multiple occasions we failed to get back above the previous support. So this is what is termed, what is called support turns resistance. So we broke the support and now it became resistance. And again on the 25th, and then on the 25th, and we could see a move down towards this red support resistance line. Again, this is still support because we're still above this price level. Again, 1, 2, so far 2 times we tried to retest it, and then we have not yet broke below it. So let's see if there's going to be another third test. It's quite often that it happens. And then if it doesn't hold here, then we could see a further drop towards the yellow support resistance line, which is currently around 7,200. So this hasn't yet happened. We can also just hold support and rally from here. It's also entirely possible. If we hold support and rally, then we could easily make new records. right this instant, I mean, you can really try to read into it, and you can say, okay, well, this is a left shoulder, this is a right shoulder, and this is a head, right? So this is a head and shoulder, and if you know your stock trading lore, head and shoulder is a scary and bad kind of pattern because usually it precedes the top, and it's like a top-in pattern basically. Is it actually head and shoulders? Difficult to say. There is also this gap. I'm gonna zoom in. There's this gap right there. It's unfilled between 22nd and 23rd. Usually this type of gaps do get filled just because we're so close to this price. So I think we could see like an attempt to fill this gap, but more importantly is this high from the 15th of June. If it doesn't, if it doesn't service resistance level, then we can make new records. But if it does serve as resistance level, then we could actually roll over again. So it's not exactly a strong market for the next few days either way. We're sort of trading sideways. I think we're consolidating gains. Can we collapse? Absolutely, but it is unlikely, and I will show you multiple sectors and major indices which are making new records of, In fact, here's one of those. This is Biotech, IBB, ticker symbol IBB. I'm trying to see if there is any. Oh, there's one. It's been a while since I used this chart. So Biotech, I'm going to show it to you on the weekly chart so that we can see more of the chart, and you can see we broke above this previous highs from mid-June and made new records. So this is a very strong chart. Obviously Biotech is very, very strong, and notice this alert that was sent out 23rd of July. So if you held it open, and hopefully, and there was no really reason to close it, if you held this open, you're up over 40%. The alert was sent at 134, is currently 167. So if you did, congratulations. I would continue holding. This is a very strong looking chart. Biotech, I'm sure, fed into healthcare, so XLV healthcare as well. You can see we just made a new record. This is yet another new record for healthcare. Again, nothing really changed as far as the technique. Alerts are sent anytime we see a drop below the blue line and then a close above it. So for example, you can see one right there around mid-April, and then another one right there around late May, and you would have been in a very nice profit by now. So you should be up about 9% already by now. And again, I would continue holding. Let me show you another few positives before I get to the negatives. As they say, do you want the bad news first or the good news first? And people seem to choose the good news usually. So here's real estate, IYR. This is also an all-time high. I'm going to show it to you. There it is. It just exceeded this previous high from December 2021. So it's been a while. This is a long in the making. So if this chart is going to play out, and I don't see why not, I think we could see something like maybe this is already a cup and handle, I don't know. But if this is indeed cup and handle, then we can see a breakout above this previous highs and a continuation higher. And I'm talking about a significant continuation higher, because the depth of this pattern is pretty significant. It's you see, it's like 60%, 50%. 38 points. So if this is to play out, and this is a weekly chart, remember, then we could see a significant appreciation for real estate. Basically, it will go maybe. Obviously, there's no way to guarantee, but it will go from 104 to like 140, which is another 35% appreciation. When is going to happen? Well, it took, you know, like 3-4 years to get to this records, but we could see much faster growth here. And real estate, you know, they don't make more of land as usual, as people keep pointing out. Industrials, XLI, this is another sector to watch, and again we are seeing new records. Things like Caterpillar and Boeing are in here. Honeywell alert, I believe, was sent back in, again, May of last year, 2025, and it's a very nice move again, which still continues. So you're up 40% already. Congratulations if you have opened. Small caps also made a new all-time high. There are the small caps. Let me triple check that we're indeed at all-time high. Oh yeah, absolutely, yeah. We're making new records for small caps. This is showing that the economy is doing quite well because small caps are very economically sensitive. RSP, this is a equal weight S&P 500, also at records. So this is again showing that even though some of the stocks may not be moving up as much as we would want them to move, on average, we're seeing an average stock within S&P 500 and within small caps making new records. We can also look at mid caps. I don't normally do, but mid caps also made a new records. All right, and now we come to laggards. So, which actually sort of surprised me, because if you think about it, this is communication services. This is a newly created, well, relatively newly created sector. You know, they only created it back in 2018. Before that, the whole thing was lumped together with the technology, XLK. But they separated XLC from XLK. XLK has other stocks in it. Microsoft, Apple, Nvidia, Broadcom, Adobe, so kind of different composition, and you can see the technology is doing okay, while this communication services with things like Facebook, Meta, Google, AT&T, Disney for some reason, T-Mobile, Verizon, and Netflix. I guess whatever is, I don't know exactly how they decided it, but yes, this is the composition. Maybe it's like entertainment, communication services, I suppose, yeah. So if we just look at it from point of view of my lines, we're seeing that this is actually now in a bear market, because we have closed below this yellow line, and this implies a bear market. It is highly, highly unusual for a major sector to suddenly drop into a bear market out of the blue. I mean, we're talking about just a couple of weeks here. You know, within June, basically, we just collapsed. So we could look at it from a point of view of, yes, indeed, this is a true bear market for this sector, and we should start slightly panicking. Alternatively, we could think about it as an artifact. It's possible that this is not necessarily yet a true bear market for this particular security. It could be just an artifact of the composition of this sector, because I checked, you know, the stocks here. For example, Meta, Facebook, Disney, Verizon, Netflix, Netflix and Walt Disney. They are indeed near the lows, but for example, Google, Alphabet, it's not. It's not near the lows. So it's kind of hard to say if this is indeed a true bear market or we should just wait and see what happens. Like, I am reluctant to declare this to be in a bear market, but anything is possible, mostly because of Meta, Facebook, because it's 25% of the of this ETF. And notice that Meta did indeed close below yellow line. This implies that we are in a bear market for Meta, and Meta is a big component of this ETF. All right. Another one that's under pressure is this beautiful Magnificent Seven thing. So Magnificent Seven, I don't know how magnificent is Meta, because it's near the 52-week lows. I wonder if they're going to, restructure this ETF and make it like Magnificent Six. I don't know, maybe add another one. It's possible. I don't know how they do this, but so Magnificent Seven, you can see they've been lagging. Whereas, for example, NASDAQ QQQ is basically near the high. Magnificent Seven is pretty much sold off. And again, I think it has to do with Meta and I think Microsoft as well. Microsoft is actually at 52-week lows. Go figure. So how do we reconcile this with the fact that we just hit records for multiple other sectors and stocks? Honestly, I don't know. I think we should just kind of wait and see at this point. Like, I wouldn't make too many big moves at this point. My general outlook on stocks is bullish, so I'm thinking about buying them. But would I want to be buying Microsoft right now? Maybe. I mean, your risk to buy Microsoft, if you were to buy Microsoft right this instant, for example, this is going to be your risk. It's about 7%. So you can open a giant position, for example. Or the same goes with Meta. Let's say you just decide to buy it right now, and then your stop is probably going to be like that much, below this lows from the March. So if you're a bottom hunter, bargain hunter, this could be an enticing opportunity, So let's wait and see what happens. I don't necessarily feel like we're yet at the point of collapse and the end of the world. Although sometimes it does feel like it, especially in the Middle East. And then again, today is Friday and we saw strikes on Iran again. And it's like very consistent. After the market closed, we see strikes on Iran. It's very interesting. All right, well, let me see. So as far as stocks are concerned, I think this is it. Again, I think that overall stocks are, pretty much bullish. Right this instant, we're seeing a consolidation, sort of sideways consolidation, and we need to basically see which way things will break. If we see a close above 7,400 or so, then at least an attempt at new records is quite likely. Vice versa, if we see a close below like 7,300, then we could see a further depreciation and both, more retesting of the lows. Okay, looking currently at Bitcoin, the security we all love, or love to hate, either way. So, new lows were made. We are super duper oversold, and then we moved from 81,000 towards 60,000. So that's pretty bad. It's like what? How many percent? 26% drop. since May of this year. In fact, strategy, which is used to be MicroStrategy. I don't know exactly why. Why would they think that suddenly, we have a new asset class that never goes down? And so the only strategy that this company's strategy was doing was buying Bitcoin, if I'm not mistaken. And suddenly Bitcoin is no longer in vogue and it's actually making new lows. And suddenly the strategy company is also making new lows. So is this a play on, on Bitcoin? In that case, why not just buy the Bitcoin or even Bitcoin ETF, IBIT, for example? Why bother with this MicroStrategy? I'm not sure. But anyways, right now it's at new lows here. So if we again look at Bitcoin, we're at new lows. So that company seems to be correlating quite well with the bear market. The bear market started clearly right there where I'm hovering in November. I can give you the exact date, November 17th. And that's because we closed below the red line. And this for Bitcoin and other Forex instruments, this is how we determine if the market is an uptrend or a downtrend. So right this instant, I am expecting a bounce. We don't exactly know where it's going to carry, the price will carry, but if it carries, this bounce carries it towards like the red line, which is around 79,000, that would be a significant, pop around 35%. And then if or when we get to that level, I would consider selling it short again. Because, you can see previously we saw very nice opportunities to sell short. In fact, this one from January of this year was good for 36%. So again, if you did short it, congratulations, and you can short it using, for example, options, for example, on IBIT, or I believe there are inverse ETFs if you're really desperate. But you can just buy puts on IBIT, as in, for example, you could have bought it right there on the 15th of January with a nice move in your favor. All right, and let's wrap up now with a little bit of Forex analysis. So we're currently looking at Euro versus US dollar. So US dollar on the bottom, Euro on top. Notice what happened just recently. So this is actual alert right there on the 19th of May with a stop above the blue line. So we did make a slightly higher high, but then we just plunged and then plunged again. So Euro is clearly in a bear market versus US dollar, and right now maybe we will bounce a little bit. I mean, something like that, maybe we bounce towards the red line again, but then we may want to consider selling it short again at that point. But I think a relief rally for Euro is pretty likely. And so I was hammering this point. If you listen to my videos, this is the dollar currency index. So dollar broke out into a new uptrend on 30th of March of this year. It pulled back deeply and retested this red line, but notice it never got below it. It never closed below it. It kind of pierced it a few times, but never actually went below this line, and then reaffirmed the bull market by another breakout here on 14th of May, following which we saw a pretty nice rally towards 52-week highs. This is actually 52-week highs, believe it or not, because previous this is May of 2025. So yes, indeed, this at 52-week highs. Now, I think again, now I think the security is overextended, and I think a pullback is actually quite likely at this point. I mean, we might see a little bit of still like marginal new highs, but I think a pullback is just super likely at this point, just from the from experience of looking at these various charts. So dollar is generally in a bull market, but short term might come under pressure. Gold, for example, is now in a bear market, down. You can see that it closed below the red line, actually downward facing arrow here already, meaning that I would be thinking about selling it short already. And I think, okay, if dollar, this all depends on the dollar. If dollar decides to continue slightly higher even, then gold and gold miners and silver will most likely continue lower towards maybe like this yellow line around 3,658. I'm reading it right off the chart for gold. The opposite is true. If dollar decides to take a breather and pull back, then gold will most likely go on a relief rally here. Same goes for silver. Silver also entered the new bear market. Silver is much more volatile, and you can see that over the past about 2 weeks it lost 20%. So you can see that it went from 68 to as little as 55. It's like 20-some% right there. So silver is again more volatile. I was warning about this for a very long time. You can see this giant red candlestick here on the 2nd of February. I said this type of candlesticks don't just appear out of the blue. There is a reason for that appearance. And yes, indeed, we're seeing this play out now pretty clearly. So I think once the dollar decides which way it will go from here, we will look at gold and silver, and we'll see which way they're gonna go. That's it for this week's recap. Head over to MasterChartsTrading.com. Click on sign up for one of the products. So again, I have one product, or rather 2 products in one bundle. Trading indicators. This lines on the chart. You can trade pretty much anything under the sun. They're available for TradingView.com. Once you sign up for a free TradingView account, come back to my site, MasterChartsTrading.com, and I will open the door for you for these indicators. The other one is newsletter, so I send out daily alerts and weekly members only videos. So for example, I highlighted this sector, IBB, Biotech. Alert was indeed sent to my subscribers here on the 22nd of July. And that's a very nice gain. 22nd of July of last year, 2025. And that's a very nice gain of close to 40% for Biotech. Because I would have kept this position open till today. There was no reason to close it really. So this is the type of trades I prefer personally. Like I don't normally send out or trade on intraday charts. So for example, this is a 4-hour chart, or you can do a 5-minute chart, or even 10-second chart, should you so desire. And you can trade 10-second chart. It's just a lot more noise. You can use the same lines. So those are the trading indicators. Newsletters, I send out daily alerts and weekly members only videos. So this week we'll be covering all of these various securities. For example, ETFs, large cap stocks, as well as some of the speculative securities will be covered in the members only video. Of course, the best deal is to get both trading indicators and newsletters as a bundle. And the best deal is to get the yearly subscription, because you get 2 months free compared to your monthly subscription. As always, you get free 7-day trial, so you can cancel during that time if you so desire. That's it for this week's recap. Please don't forget to hit the like button, subscribe to this channel, share this video, and I'll talk to you next week. Thank you for watching. Have another great trading week. Bye-bye.